Welcome to the 2022 annual tax update. So I'll be your presenter today. My name is Mishkin Santa. I'm one of the partners here at the Wolf Group. This is a little bit of my background. This is our general disclaimer for all of our presentations. And so what I'm going to do today is I'm going to basically divide the presentation up into kind of two segments. The first segment I'm calling the Are We There Yet segment, which kind of just gives you, puts your thumb out there and so you can see the wind where it's blowing currently right now here in 2022, some things that I think you should be aware of with developments. And then we're going to get into what's new for 2021 tax return, but also looking forward at things to prepare for 2022. So first of all, we've got the Build Back Better Act, which I'm sure a lot of you are well aware of. There was the House version that was passed in November, and then there was the Senate version that was passed in December. The House version had more stuff in it than the Senate version. One area where they did overlap kind of almost similarly was the qualified small business stock deduction, which basically was going to disallow that deduction, which was quite a generous deduction for incomes over 400,000. One area that we're looking at very closely is the second kind of line item under the House, which is the GILTI tax. So for those individuals or businesses with the GILTI tax, which is the form 8992, currently right now that's at about 13%. The OECD and pretty much everybody wants there to be a global corporate minimum tax. So everyone's pushing for a minimum rate of 15%. And in the US, the way that you would do that is you wouldn't necessarily raise the GILTI tax rate, but you would lower certain deductions that are beneficial right now that would eventually get you to that rate. So something we're keeping a close eye on. I think regardless of what plays out with this tax bill or potential other tax bill, at some point you'll see maybe a standalone bill just addressing controlled foreign corporations and the GILTI tax. One big item that was in the Senate bill was IRS funding, which was the $80 billion the IRS was looking forward to getting their hands on. They obviously did not get that as the bill is stalled out, but it is something that is there, and it is something that we'll talk about this here in a little bit. But funding is a big issue for the IRS right now. So where is the status of the Build Back Better Act? Well, it's stalled out. So Joe Manchin, which is the picture there in the slide, has basically indicated that there's a couple things he doesn't like. He doesn't like the child tax credit. He doesn't like the SALT cap changes, which is changing the SALT itemized deduction state and local tax from 10,000 to 80,000, which would be very beneficial for individual tax filers on the East Coast and West Coast. Doesn't like that, and then doesn't like certain changes to electric vehicle tax credits and things like that. There's a strong belief that the Build Back Better Act is dead in the water as it stands. And that a new act, a skinny down version of the BBBA, if you will, which they would like to rename because they believe the Build Back Better Act sounds like an infrastructure bill. And since they already passed one infrastructure bill, they think they can better sell it as another type of bill. So they're going to try to call it the American Families Plan, which I believe was the original name of the Build Back Better Act. So if you hear the AFPA or the TAFPA floating around, it's just the Build Back Better Act in a whole new reincarnation. It's got a price tag that is about 1/4 less than, or 1/2 less than what the BBBA was supposed to be billed at. The IRS Commissioner, I was lucky enough to attend a tax conference in Miami last week, which is really cool. I got to see the tax commissioner speak virtually. Chuck Reddick, I'm a big fan of his. I think he's done a great job at the IRS. But basically he indicated that his term ends on November 12th of this year. He was very much happy that the IRS had recently opened a massive call center in Puerto Rico, which they're hoping can eliminate or alleviate a lot of the call lag times or the inability to get through to the IRS. He is heavily touting the Office of Fraud Enforcement, which we'll talk about here a little bit later. And he's also touting the fact that that office, in conjunction with some of the other offices, are really using data analytics, robotics, and AI. So in my opinion, you probably have half the IRS, which is, in the 20th century, and then half the IRS, which is, at some point, or in the 21st century, excuse me, and then half of the IRS, which is, maybe in the 18th or 17th century as far as technology goes. It's a very weird dichotomy that they have there. He did indicate that cryptocurrency is a very rich target environment. They're going after a lot of folks that have cryptocurrency non-reporting, especially of income. There's huge areas of that. And one of the big takeaways that I got personally was that they are really going to start going after folks for offshore compliance. Now, in the past, we've said that, but I mean, I think what I'm saying now is they're really coming after folks for patterns of non-compliance. So, for example, if you have multiple years of failing to file an FBAR or multiple years of failing to file a foreign financial asset disclosure, that is going to be an area that they're going to really press down upon by not just saying, hey, you failed to file 1 year, but we've established a pattern of negligence on top of that, which really opens up the penalty base that can be assessed. It's kind of the worst of all scenarios, if you will. That in combination with high income earners that have not been filing and people that have complex filings that have been filing inappropriately are going to be areas that they're really going to get into. Last but not least, if you do get audited before you voluntarily come forward, because the commissioner is basically saying clean up now while you can, they're basically going to say, you can't say that you didn't know, especially with the FBAR. Everyone should know whether or not they have an FBAR filing requirement, and they're basically not going to buy the argument where you say, I didn't know I had a requirement if you get audited. So if you voluntarily come forward, you can make that argument. If you get audited and an IRS auditor questions you on that, that argument's probably not going to hold weight with them. So be real careful with that. This is just a little chart of the way the IRS is currently structured. And I just wanted to make sure that everyone, we use a lot of these terms like Office of Fraud Enforcement, Taxpayer Advocate, Large Business International, Criminal Investigation. I think it's good to see a chart so you can kind of see where all of these offices fall at and who they report up to get a better sense of where you're at within the Internal Revenue Service. The IRS had a great year last year, despite all the news reports and everything that I think that the taxpayers and the tax practitioners are kind of feeling. They had 4.1 trillion of gross tax collection, which is huge. It's a big number. I think it's the highest number ever. 269 million tax returns were processed with 81,000 employees. But a big problem they're going to have is over the next 6 years, they've got roughly 50,000 employees that will either quit, which they're predicting they'll either quit, or they will retire. They have a lot of folks that are aged out and will have to voluntarily retire at some point in the near future. So it's a big area that is of concern right now, and they're giving a lot of thought and effort to how they're going to replace 50,000 employees over the next 6 years. The taxpayer advocate, Erin Collins, who's also fantastic, I'm a big fan of hers as well, sent out the annual report to Congress. If you have a chance to read through that, it's very, very informative. It's quite lengthy though, but it's very, very informative. That was done on the 12th of this month. She's recommending that we kind of level the playing field. There's a lot of notices that get spit out automatically, and the computer obviously doesn't understand that we're in a pandemic or that people are experiencing issues related to pandemic related items. And so they're recommending that a 6-month hold be placed on all collections notices, which Congress is taking very seriously and they might approve. And by doing that, that'll kind of level the playing field a little bit, allow everyone to get back to square one. And she's also indicating that at this point in time, the taxpayer advocate is really only accepting issues for 2019 amended tax returns when it comes to the backlog of unprocessed returns. At some point, they will start to work on 2020 returns that have not been processed, amended returns. But right now, if you have a 2019 amended return, it's a good opportunity to maybe get with them if you haven't seen a result come out of that and you've been waiting a long time. They also had the biggest number of cases closed in 2021 at 252,000, which is a significant increase for them. But they've seen their budget decline by 14% over the last 10 years. So they're in need of a lot of a budget influx as well. This is a quote from Erin, basically indicating, hey, look, paper is the IRS's kryptonite. And I'm not sure if anyone saw the pictures, but they showed pictures of the backlog when it hit 35 million parcels, about these big bins full of IRS mail and taxpayer correspondence and mailed in tax returns. And, that's what really kills the IRS, is when people have to mail things into them. And some things you have to mail in, like there's no other option. So for example, the 3520, 3520A. But what I would tell anybody is that if given an option between mailing and e-filing, I would always take e-filing. And that's kind of the mantra at the Wolf Group. We always recommend e-filing, or try to find a way to e-file if you can, clear those diagnostics and get that return e-fileable. We don't want to have to mail in stuff, because then it goes into a backlog and the IRS just has a really, really tough time processing that stuff. Okay, so 35 million is the watermark for how many tax returns were in the backlog at one point in time in 2021, which is a lot. The IRS has really dwindled that number down, so they've done a good job of trying to overcome that. The IRS basically, I think, believes that a lot of taxpayers can't do math because there were 14 million math errors on 2020 tax returns, which means that at some point 14 million notices were sent out. I would, you know, honestly, I think that a lot of that has to do with the economic impact payments. And I think that's more so on the willy-nilly way that those were recorded by the IRS or sent out. It's tough to know the exact amount of that economic impact payment in some cases. And so I think that's what leads to a lot of those math errors. 11% of all calls to the IRS went through, so that's not many. They were 282 million calls placed at a rate of 1,500 calls per second, and only 32 million got through. So you take 32 divided by 282, and you should get 11%. So, you know, keep in mind that that is still an issue today. There's still very long wait times. We have staff that regularly call in every day to try to get issues resolved with the IRS, and they're reporting 3 to 4 hour hold times. So, you know, make sure to pick your poison on the best way that you deal with the IRS when you have issues like that. The Where's My Refund tool, I know that we promote that at the Wolf Group, but there are some significant issues with that at the moment. It's not functioning very well. It's showing kind of responses and things on there, but they don't really mean much. And so the IRS is looking into ways to fix and upgrade that. So don't pay it too much of attention. As far as penalties go, I know a lot of people have received international informational penalties, but the stats just came out that roughly about 71% of those get abated. So that's great. But the drawback to that is that people do get penalties, and they come through very quickly. And then you got to figure out how best to deal with them. And there's a cost associated with that. And at a 71% abatement, you know, percentage, I would think that the IRS would want to do something about that. I think that's a very inefficient process. But a lot of that comes out of the fact that the IRS is still operating with 1960s technology in those parts of the IRS. So again, you have AI robotics over here with the Office of Fraud, and then you have 1960s technology over here for customer service. So it doesn't make a lot of sense on how they're structured internally, and they definitely are due an infrastructure upgrade on at least one part of their operations. There was an emergency request for funds that was made by Congress for the IRS. We'll see how that goes through. That was 2 days ago, but that's in lieu of the $80 billion that they were supposed to get under Build Back Better. Where's the backlog now? So the backlog is at 6.2 million parcels. So they really dwindled it down, but it's still there. Most of that is related to 2019 and 2020 tax returns. Out of that 6.2 million, there were about 2.4 million amended returns. And then the rest are roughly, there's another backlog of 941 filings and amended 941 filings for payroll taxes. So if you're a business and you're kind of wondering where your 941 or 941 amended return is at, it's likely in the backlog. This is a letter that was sent to by Congress to the commissioner just a couple of days ago, basically indicating that, you know, hey, there's this backlog. It continues to be a backlog. It continues to create havoc and problems. At what point in time will the IRS, you know, put something together to resolve it or make sure that they don't have a problem? And the issue, I think, is that, you know, the filing season opens up on Monday of next week. Once those returns start to go in, you know, will that further delay this backlog? And my guess is it likely will, especially if people are really early to filing this year, which I think that they will be. I've seen a lot of people really on the ball this year. So I think we're going to see a high volume of tax returns in January or February. That would be my guess. You know, the old adage, go talk to your congressman, go complain to your congressman. Well, people actually do. They actually, but they do so in a positive way where they're trying to get their congressperson to help them out. And most of the time it's related to passports. You know, you maybe need an urgent passport or an issue with, you know, immigration or the State Department. But they also take requests for the IRS if you're having problems with the IRS. And normally those requests are made about, you know, 10, 11,000 times per year. In 2021, there were over 66,000 requests to assist with the IRS to Congress people. So it's a six-fold increase from 2020 to 2021, and historically a record high number of Congress people were asked to intervene or get involved with issues related to the Internal Revenue Service. This is a letter a couple of days ago from all these different organizations. You can see at the top, AICPA, A lot of tax societies basically also indicating that they're very concerned about the upcoming tax season, about the delays with a lot of things and the rollout of a lot of new requirements, and how to properly address those. So, across the board, whether it's Congress or the taxpayer advocate or different, tax organizations that represent tax preparers, I think people are very concerned with the upcoming filing season and how this will play out. One thing that I think we've been, let me go back. One thing that I think we are trying to beef up more, this is a snip from our tax organizer, and down there at the bottom, basically, we are urging a lot of people to go set up an online IRS account. And there's a kind of click here button where you can get instructions on how to do that. That will actually expedite. Normally it takes 2 to 3 weeks for a Form 2848 declaration of representation to get on file, but that will actually expedite the processing of that form for us and our ability to then advocate on your behalf. It'll also allow us to get information a lot quicker. So if we need to pull transcripts or get documents for you, then it makes life like that a lot easier. The other thing I would also encourage a lot of people to do, especially given the nature of the IRS and the backlogs and all the issues that I just raised, is to get a 2848 on file. I think the cost, as I like to say, the juice is worth the squeeze. I think it's worth it just to monitor, to be able to access. If you get a notice, it's easy to get in there, figure out what's going on and resolve it. I think it's almost like buying insurance. That's the best way that I can recommend it. Claim of refund. Okay, so one issue that we're having is that the past 2 years, the filing date has moved. So in 2020, the filing date went from April 15th to July 17th, and then 2021, it was put out an additional month to May 17th. The problem, though, is that a lot of people think that they have 2 to 3 years from that date to get a refund. What they don't realize is that the refund statute expiration date still ties back to April 15th. And so if you don't call the IRS to ask them the specific refund statute expiration date, you may be operating under misinformation. And I say this, going forward, because what happens is that if someone comes to me for a 2020 or 2021 tax return issue and say 2022 or 2023 or 2024, I want to make sure to let that client know that we're going to need to check that statute expiration date. So we're operating under the right assumption or the right information. Otherwise, if you try to file an amended return for a claim of refund, it's going to get denied because it's not going to be timely. So understanding these dates are going to be very critical going forward if there's any issues that could generate a refund for 2020 or 2021. Okay, informational reporting penalties. So there's a special section of the Internal Revenue Code 6751B1. Basically what this section says is that before you get a penalty, and penalties I'm talking about here are Form 5471, 3520, 3528, 5472, 8865. But before you get a penalty, what's supposed to happen is that a supervisor is supposed to look at it and sign off on it. And if there is a reasonable cause statement that's submitted, they're supposed to read that. What's happening is that's not the case. They're being issued without sign off, or if they're being signed off, it's well after the process has been done. And basically what is being recommended is that supervisors are required to sign these before they're sent out and to read any documentation that comes down with a tax return. So if there's a reasonable cause statement or some sort of explanation, that needs to be factored into their decision making. I can understand, when you have a backlog, you're trying to quickly go through things, but I don't think it's right to be issuing $10,000 penalties, especially at that level, that amount of money, without having a signature on that. And what I would tell you is that if you do have a penalty like this and you are appealing that decision, one of the first things that you want to ask is, did someone actually sign off on this penalty? That's a good strategy to go in with, because if no one signed off on it, then it's not valid under 6751, and that may be a good way to get out of your penalty. The Build Back Better Act, though, which one of the provisions I did not like, was that they were going to eliminate this provision, which means that any penalty could go out without signature approval from a manager or supervisor, and that in turn would then make penalties occur a lot faster and a lot more regular, and would create a whole host of issues. So we're watching that very closely for whatever the skinny down version of the Build Back Better Act is. One of the areas that we have some disagreement on, practitioners versus the IRS, I would say, is Internal Revenue Code 6212 versus 6671. And 6212 basically says, look, before you have a liability that's assessed against you, you need to get a notice of deficiency. But 6671 basically says the IRS in some cases with some penalties doesn't need to do that. And they believe that it applies to all these code sections on the right-hand side of the slide, but there's no real authority that ties it all together. And as I indicated earlier, they're not reading the reasonable cause statements. Those are just kind of going in the trash. And then your attorney has to, fight with appeals officers to get them to read it and then give you an abatement. But, honestly, I think this is an area of contention that will eventually go to a court case and will have to be resolved if the IRS doesn't resolve it themselves. It really should be a taxpayer-friendly thing where you should get a notice of deficiency before a penalty, especially again at a $10,000 level. I don't think that those should come out just without someone looking at it or giving you an opportunity to respond. The mailbox rule. This is something I want to clarify because I see this issue year over year over year. The mailbox rule is Internal Revenue Code 7502. And what that rule says is that if I mail in something to the IRS using US certified mail or a delivery service or something like that that's approved, then they're basically going to use the postmark on that as the date of filing. They'll honor that. That's the mailbox rule. Even if it gets there after the filing deadline, they should use the mailbox rule. What that does not apply to, though, are, for example, electronic payments. And so I see that I think tax softwares didn't know about this rule because I think this is an issue sometimes with tax software, that the payment has to be made the day before. If it's electronic, it has to be made the day before it's due by 8 p.m. If it comes in after 8 p.m. on the day before it's due, it will be a late payment and you may get a penalty. So one of the things I think people have to understand if they're doing FTEPS payments, for estimated tax payments or tax due payments by April 18th this year, make sure to get those payments in a couple days early so that you don't get a late payment penalty because the mailbox rule does not apply to that. Okay, the Office of Fraud Enforcement. This is, again, a big area. The IRS is hot to trot on this. Carolyn Schenk there to the right and Eric Hilton, two very good practitioners with the IRS. They're going to be heading up a lot of this stuff. They're going after, there's this thing called the Operation Hidden Treasure, which is aimed at high income filers. There's also aimed at cryptocurrency folks. Their software is super sophisticated, as I've indicated earlier, analytics, data, robots, data scientists. They can now check cross blockchain activities. They're going to be using more John Doe summonses. At that conference, the quote was, "It will be all crypto all the time." And the eye of Mordor, if you will, has turned towards the non-fungible token market. There's 44 billion over the last calendar year that's been generated in that market. And they're looking very closely to make sure they get their piece of the tax revenue pie. So if you're in the crypto space and you're in the NFT space, make sure that you properly report any income generated from that because they are looking very, very closely at that on the 2021 tax return. They're also developing a lot more fraud cases than ever before. At the end of the December 2021, they had about 1,800 fraud cases in development. Speaking of the crypto, again, just as a reminder, there's that question at the top of on the 1040 page 1. If you had a crypto transaction occur where you disposed of crypto or exchanged it or whatnot, make sure you check that box yes. One of the things I want to highlight is this Treasury proposal. I talked about this in a previous presentation that Treasury had proposed back in May of 2021, several different changes for cryptocurrency, two of which were actually adopted into the infrastructure bill. Those are the ones for 6045 and 6050I. The one that they didn't adopt, or the one that hasn't kind of gone through yet, is the change to 6038D. And what 6038D, what they want it to say is that all cryptocurrency is basically treated like a foreign financial asset, regardless of where it's located. And so what that would do is that would then trigger the filing requirement for crypto on Form 8938, again, regardless of where it's located. We think now that if the crypto is located offshore, you need to put it on the 8938. It's obviously not reportable on the FBAR. They've come out and stated that. But this would make all crypto, regardless of where it's located at, reportable on the 8938. IRS University. So the IRS wants to hire 25,000 employees. So remember, they got 50,000 retiring or attrition rate. They want to hire 25,000 over the next 18 months. They've already made contracts with 2 unnamed universities. They want to create a pipeline directly to colleges and universities to replace that staff and basically make it a faster cycle time to bring on new and young staff. So there's already 2 IRS universities, and there could be more than that coming along. They're basically going to divide people into 3 groups. So group 1 are going to be college graduates and folks with less than 5 years of experience. Group 2 are going to be tax professionals in their 30s and 40s, so probably 10 years of experience or more, that are going to coach group 1, but they're also going to have outside responsibilities. And then group 3 would be former IRS employees, retired private tax professionals, and their only job, they would have no outside contacts with taxpayers. Their only job would be to coach all the rest of those other groups. And so it's a big push for hiring and recruiting in the IRS right now. Malta, I know that there are some folks with the Malta QROPS. That for years has been a hot button for the IRS, and it forced Malta and the United States to sit down, and they basically in 2021 came up with a competent authority arrangement indicating that if you have a Malta pension, it is not considered a pension that qualifies under the Malta-US tax treaty. And so what happens is you default to a foreign grantor trust classification, and you do not get the beneficial rules under the Malta-US treaty, which I think a lot of people have been using improperly. And so if you've been doing it improperly, be careful, because you could be under audit, not even know it. Now is the time to come back and clean that up. And if you have been doing it properly, keep doing it properly, and make sure not to use the US-Malta treaty. Frequently asked questions. So this is one of the things I harp on to a lot of people about. Frequently asked questions are not official guidance because they're not published. Only things that are published in the Internal Revenue Bulletin can be relied upon in a court proceeding. So when you look at streamlined filing, for example, those are all frequently asked questions. You can't rely upon that. When you look at the IRS cryptocurrency frequently asked questions, you can't rely upon those either. The IRS has announced that they are going to give some relief, though, if you do rely upon frequently asked questions, and they are going to publish prior versions. I like to print out, anytime we rely on a frequently asked question, I print it out and I date stamp it to make sure that we have that for the record, because those things get deleted or they get modified, and then it's like, oh wait, that I was relying on frequently asked question 6, which is now frequently asked question 8, and how do I prove to the IRS that that was the one I was relying upon? They say they're going to put out prior versions, but until then, if you are relying on an FAQ, make sure that you print it out and then it's date stamped, and that you keep it in a file somewhere to take advantage of this relief. Okay, foreign trust penalties. This is a bad result. I'm not a big fan of this result, although I'm not a big fan of the person that got this penalty either, so it kind of washes out. Mr. Wilson basically, and this was denied by the Supreme Court just back on the 11th, they're not going to look at it, but Mr. Wilson basically funded a foreign trust with $9 million. He thought his wife was going to divorce him. They in turn actually did get divorced, and she didn't get any of the money. Once they were divorced and everything was done, he then terminates the trust and sends all the money back to the US. He failed to timely file the Form 3520, and he argued that when they assessed the penalty, they assessed it on 35% of the distribution, which was 9.2 million. He argued that the penalty should be 5% because he's the owner of the trust. So it'd be 5% of the value at the end of the year, which is $0, so $0 penalty. The IRS disagreed and assessed 35% of the liquidating amount. Basically, again, the case was denied by the Supreme Court. But the way it works out is that if you are both the owner of and the beneficiary of a foreign grantor trust, and you do come up with a penalty situation between the 5 or 35%, the 35% will win. So be careful there. Schedule B. For years, we've talked about Schedule B and whether it can be used against you to prove willfulness or not willfulness. This is a very interesting case, the Hughes case. Basically, this person did not file Schedule B for 2010 and 2011, but they did file it for 2012 and 2013, and they didn't check the proper boxes. So they were determined to be willful for 12 and 13, but non-willful for 10 and 11. Go figure. And again, I think that's a bad result, but that just shows you how detailed the IRS can get with their penalties and how much Schedule B Part 3 is important to getting those questions correct on a tax return. And for those of you that don't remember Schedule B Part 3, this is what it looks like. Literally, you just got to make sure you get questions 7A, 7B, and if you have a foreign trust, question 8 correct if you want to try to avoid willfulness, which can be a significant penalty. That's Cynthia Loomis there on the right, Republican senator from Wyoming. A lot of people are not happy with the infrastructure bill and the passage of the Internal Revenue Code 6045 update to make broker reporting for certain cryptocurrency. Regulations for that will be issued sometime this year. But in the meantime, Cynthia is planning to do a full tax package for all crypto, get a full tax bill put out there, which I think is fantastic that they're trying to do something. I don't know what that'll be, so I'm looking forward to seeing it. But she's one of the few members of Congress that is really tied into the crypto lobby. And I've said many times before that it needs to be more of an open conversation about cryptocurrency so that we get a good set of rules on file. High def is currently going on. It's an operation by the IRS that is looking for high income non-filers. And basically they did a sampling of about 300 tax returns, and they had about 117 folks that had not filed tax return, believe it or not. These folks have W-2s and 1099s. They're on file with the IRS, but they never filed tax returns. And out of these 117, there's about 5.2 billion in taxes that have not been paid, which is a big, big number. And even more so, they've got about 880,000 non-filers that haven't paid about $45 billion in tax. So, what they're sending out people into the field per se, which means a revenue agent may knock on your door, but they're looking for people that have not filed. And again, looking for those patterns of non-compliance to really force down and make sure that people that should be filing and paying, that have these high incomes, are doing that. So keep in mind that that's happening. Surround sound is a follow-up to high def, and IRS is being quirky with these names, but basically surround sound is really looking for the most egregious people that are not filing. So people that are making, millions of dollars of income that they know the income is there, but they have no tax return that corroborates that income or shows how that income should be taxed. And they are making referrals to criminal investigations and audit on those people. That's surround sound. Streamlined filing was updated, I believe this was August. One of the things IRS was very scared about was losing out on the revenue from the transition tax. So if you have certain non-compliance related to international informational reporting and you should have done a transition tax filing, your disclosure period under streamlined filing, if you're doing that, would change from 3 years to now 4 years. So for example, if someone came to me now and they had that issue here in 2022, but they haven't done their 2021 tax return, we would be doing returns for 17, 18, 19, and 20 under streamlined filing. The only problem I have with this is at what point do we stop doing this? Is it 2023, 2024? Will I end up having to do 6, 7, 8 years of returns? This reminds me then of the old offshore voluntary disclosure days where, we have to go back forever and a day to 2017 to try to, make sure the client is in full compliance. So an area that we're going to watch closely and make sure that we know what changes are coming out of that. And that's the current landscape of the day. That's where we stand at here in 2022. What's new for the tax season and what's new for 2022. So the 2021 federal income tax return deadline normally is on April 15th. However, that happens to be the Emancipation Day in DC. So the return date has now been moved to April 18th. And for those folks that live in the great states of Maine and Massachusetts, you have Patriots Day on the 18th. So your filing deadline is going to be April 19th. So make sure you circle that on your calendar and your federal filing deadline. Also remember, state filing deadlines can be different. So make sure you investigate your state versus your federal. These are some federal key due dates. So as I indicated earlier, the tax season opens up next Monday. We're raring to go here at the Wolf Group, and I hope everyone else is too. The earlier you can get that return in, the better. But keep in mind the due dates on several of these things. And the extension date is not October 15th, it's October 17th. FERPTA. So I know a lot of people had issues with FERPTA in 2020 and 2021. We are now back to doing the Form 8288B. For a while there, we kind of put a hold on doing those because they weren't having any effect. People were just getting denied. And I don't like doing a service without providing an ROI. And so, again, we think that this will work now if you try it. So what I would tell you is that if you're selling a house in 2022 and you're a G4 or you're a non-resident alien, you might want to consider doing the Form 8288B if you don't think you're going to owe the tax on the withholding. One thing that I will note, this is very big for the filing season, is that the IRS has indicated that they're going to put a hold on sending out the stamped copies of the Form 8288A. I don't know if that's true or not. I mean, that could be true, but we've heard from several IRS agents that is true. And what they've indicated is that when you file the 2021 1040 NR, take the copy from the settlement agent of the 8288A that was mailed in send that, attach that to the tax return, the e-filed copy, along with a copy of the canceled cash check that was sent down to the IRS with the withholding tax. And that should suffice to get the refund claim in and processed. You still should keep an eye out for the stamped copy of the 8288A just in case. And if you get that, as I've indicated before, that is the golden ticket. You need that. But in lieu of that, this is the process that we're going to be doing at the Wolf Group for the time being, just to get those claims of refund in and get everything started. On the 8288B, I will tell you that our service does now include the forms 2848. I mentioned earlier, I thought that was good practice. For the 8288Bs, we're definitely doing this because we know we're going to have to contact the IRS FERPA unit and talk to them about those applications. Advanced child tax credit. So if you got this letter 6419, these were sent out on January 5th. Make sure you hold on to them. I think that if we don't want 14 million math errors again, we're going to need folks to send these in to us so that we make sure we get the proper amount of tax credit received. Please do not throw them away. Please send them to, if you're using us, send them to us. If you're using someone else, send them to your tax preparer. Okay, K2s and K3s. And I want everyone to listen up to this because this is really important if you have a K1 that has foreign income or foreign attributes on it. Typically on the K1, you can tell this by looking on old K1s on lines 16 or 20. And I always thought those lines were a little ridiculous because you're grouping up a bunch of foreign source income and deductions and stuff into very broad categories. What the IRS wants to do now is they want, or they're requiring, basically S-corps, partnerships, foreign partnerships, if they have these reporting items, in lieu of doing lines 16 and lines 20, to do the K2, K3. The K2 is 19 pages, the K3 is 20 pages. It's a lot of work. And I think some folks had to do these last year that had weird fiscal year filings. And I've talked to several people that did that, and they indicated it was a ton of time, and it's all billable hourly. And these things will likely delay individuals from filing. So you have these partnerships and these S-corps and these foreign partnerships. They're going to need to do this work for a lot of their underlying partners. And that's going to delay those filings, which is going to further delay the individual filings. So fair warning to everybody, these things are going to be significant, and be prepared to have delays to your income tax filings if you do get a K2, K3, because it's going to take, again, those folks a ton of time to do that work. And then it's going to take your individual preparer a ton of time to enter that stuff into the tax software to get it correct. And as you can see here, if you look at the K2, look how many different sections of reporting that it requires. On the right-hand side, the K2 and K3, you can see the various entities that may have to produce those. There's a $10,000 penalty, and I warn everybody about this. It can apply not only to the S-corp, the partnership, but it can also apply to individuals for not properly reporting their K2, K3s. So be very, very careful. Again, if you have the K2, K3, there's a one-time get out of jail free card for 2021. That's the transition relief, if you look on the right-hand side of the slide. But these things are going to be hot and heavy going forward in the future. So it's a good opportunity, I think, for the 2021 return to watch how the process plays out and make sure that you take great care to get this reporting done for the future. Which leads me to proposed form 1040. I should say 1041 NR. It says 1040. That's a typo on my behalf. 1041. So back in 2008, I thought this was a fantastic move. The AICPA sent a draft. Man, I'm really making some errors here. 1040 NR. It was a 1041 NR, which does not exist. And the 1041 NR was supposed to replace the 3520 and the 3520A. It has not done that. They've not ever approved the 1041 NR. But the question is, now that we have this K2, K3 reporting, if I'm an individual owner of a foreign grantor trust that in turn reports owns a foreign partnership, there could be a circumvention of the K2, K3 on my individual return, because the K2, K3 then goes to the trust. The trust then may not pass that on up to the individual person. And so would then this, because the foreign trust filings don't produce a K1, they produce a foreign grantor trust owner statement. And so the question is, will the K2, K3 then push this conversation where perhaps we could eliminate 3520 and 3528 filing in lieu of a 1041 NR? And I hope the IRS will come to will come around to this and say, hey, let's get rid of these draconian forms and let's do this 1041 NR. The 2021 5471 has not changed. So the last couple of years, it's added on new schedules, and it's been a nightmare to complete. I mean, this thing is 40 pages of gobbledygook, and it's ridiculous to add in all these additional schedules. If they're needed, don't get me wrong, I understand the importance of why they added on schedules, P, Q, R, the updates to Schedule J, but as you can see in the chart to the right, it's just a complex form. It's probably the most complex form in filing we have in the Internal Revenue Code. One of the things that we're going to be focused heavily on is the high tax exception and 962 elections. Those are going to be areas that we're going to be talking to our clients more about for the 2021 filing. And we're going to try to walk through the benefits and drawbacks of those various elections depending on the jurisdiction in which the controlled form corporation operates in. Economic impact payments. So hopefully this won't be as big of a problem as it was in prior years, but basically what will happen, or what should be happening pretty soon, is that if you did get a third economic impact payment, that should come to you in letter 6475. Make sure you keep that letter, give it to your preparer. We want to try to avoid those math errors again. And again, I put a little slide there or a little picture that shows the two letters that folks are really looking for these years to help complete your tax return. One for the child tax credit, one for the third economic impact payment. IRS protection pins. So if you've ever been a victim of identity theft, you get a pin. I think it's like a 4 or 5 digit code. It normally goes on to the 1040 right where you sign at, and then you get a new pin every single year. It gets reissued to you. In the past, you could only get that pin if you were a victim of identity theft. Now they're allowing anyone that wants the pin to get the pin. And in some cases, that's kind of a proactive approach to identity theft issues. It can help by curing the identity theft before it even happens, because obviously the identity thief would not have that pin, and the pin has changed every single year. So even if they did find an old pin, it wouldn't apply going forward. So if you're concerned about that, if you're a very cautious person, you may want to consider getting an ID protection pin for your tax return filing. If you do get one, just know that it's valid for 1 year. You do need to give that to your tax professional. It will cause an e-filing error if you don't give that to your tax professional and they do try to file the return. That'll be an issue there. So keep that in mind if you're going to get an IP pin. Okay, this is more for the G4s and the non-residents that are in the audience. There is this new FinCEN form, that's the Financial Crimes Enforcement Network for the Corporate Transparency Act. It has not been released yet, but it is soon to be released. Regulations were proposed in December of last year, will be finalized in February of this year, and basically requires non-resident aliens that own US companies like LLCs, corporations, et cetera, to disclose who the beneficial owner of that entity is. They must also disclose what are called company applicants. So anyone that filed the application with the Secretary of State and anyone that controlled that person to file that application. So for example, if I'm a G4 and I engaged an attorney to register an LLC for me, let's say they did that 5 years ago, and then the attorney instructed their paralegal to go register that company, I would have to disclose the name and information of that paralegal, the name and information of that attorney, and then the name of the beneficial owner, which is the G4 individual. And that's a lot. That's a lot to try to figure out. And you have to get all of this information on the slide. And it has to be presented. So it's going to be something, and I gave a very, very small example, but you can think of bigger companies that have a lot more, non-resident alien owners. It can be a very burdensome thing to figure out who has to, first off, who has to report, and second off, where do we get all of this information to give the beneficial ownership. When the form does come out for companies that are currently in existence, you'll have 1 year to file. If you've opened up a brand new company, you'll have 14 days to file. So any new company opened up by a non-resident alien in 2022 will have 14 days to file. Failure to file is a $500 fine per day, up to $10,000. So be very, very careful about this form when it comes out. Keep your eyeballs out for it. It is something that a lot of people are talking about, and we do see a lot of work in this area. One thing to note is that if you see that middle section there, if there's any updates to the beneficial ownership or changes of ownership, then the form has to be filed again. So it's not just a kind of one and done kind of deal. The form can be required at various times during the life cycle of a company. E-signatures. So due to the pandemic, the IRS is trying to move more and more to e-signatures. There's a recent memo that was issued that basically extended e-signatures for certain paper filed forms through October 2023. Those would be the forms on the left-hand side of the slide. And on the right-hand side of the slide, they are allowing the e-signatures for the Form 2848, and tax professionals should be submitting those through this tax professionals portal. Inflation adjustments. So the IRS always comes out with inflation adjustments, and they basically giving us, and this is for 2022, this isn't for your 2021 tax return, to make that very, very clear. Your 2021 tax return would have amounts that are going to be less than this. But for go forward, for planning for 2022, where we're at today, for example, the annual gift tax exclusion is $16,000. The foreign earned income exclusion is $112,000. The unified credit for estate tax has jumped to $12,060,000. The expatriate mark-to-market lifetime exclusion for mark-to-market gain is now $767,000. So these are new updated numbers that can be utilized, on a go-forward basis for planning purposes. Just keep that in mind that every year the IRS updates for inflation some of those numbers. Another area that's been updated for inflation is the qualified business income deduction. Again, this is for 2022, not 2021. But if you look at the box down there, it shows the updated threshold amounts and phase in, phase out amounts. So keep that in mind if you're dealing with the qualified business income deduction. This is the basic tax rates that we're looking at right now. Again, we thought that with the Build Back Better Act, there would be an increase in tax rates. There has not been. So we're back to the good old-fashioned tax rates of 10% to 37% that we're dealing with. The same is true for capital gains. There was a lot of chatter that the House would do 25% and the Senate would do 39.6% for the maximum capital gains. Those weren't even put in any of those bills. So it didn't even make it there. Step up and basis changes didn't make it there. Changes to grantor trust rules didn't make it. A lot of stuff did not make it to the Build Back Better Act that were proposed. So we are still within the current normal capital gains tax rate structure. Estate tax returns. So we've seen an uptick in these lately. One of the cases that just came out on the 14th was the Winnett case, or not the Winnett case. There was a memo that was issued that was based on the Winnett case. And the IRS just wants to clarify to anyone that's filing an estate tax return that the statute of limitations for assessment on an estate tax return does not start until the completed and signed Form 706 gets to the Kansas City Service Center. So again, this form has to be mailed in, you need to do the mailbox rule, and it needs to go to the Kansas City Service Center. So for those that are having to do an estate tax return for someone else, make sure that you file that guidance closely. Otherwise, you may have an open statute of limitations in perpetuity. Virginia. So Virginia's got a conformity bill that was just presented. Session began on the 12th. And they're thinking about conforming to the Internal Revenue Code for the period of December 31st, 2020 to December 31st, 2021. Why is that important? It's because of the PPP loans that went out. And if they did that, there would be full deductibility for the PPP loans for 2021, which is a direct slap in the face to folks that got PPP loans for 2020 because they were only able to deduct $100,000 of business expenses for whatever their PPP loan was. And so there's a lot of contention in this because they want to do the conformity, but some folks don't want to go back and conform to 2020 because I think that would create a whole bunch of amended tax filings for Virginia. And some folks do want to conform to give the benefits of the PPP loan deduction for both years. So watch that conformity bill closely. The state of Virginia, this is kind of where the current tax rates are. These are for 2021. The due date for the 2021 Virginia return is May 1st, 2022. Maryland, that's Governor Larry Hogan on the right-hand side there. Maryland has a significant budget surplus. So Maryland did very well during the pandemic. The governor wants to eliminate the state income tax on retirement income, which is huge. And that would not occur on the 2021 tax return, but it would start with an exclusion on the 2022 tax return and would apply to seniors age 65 and older. So keep an eye out for that. That is not law yet. That is still part of the Maryland proposed tax relief package. But if it is passed, it is a planning point to consider for Maryland state taxes. Here are the Maryland tax rates. And again, that return is due on the 18th. And then the District of Columbia. So the District of Columbia is the reverse of Maryland. They're hurting for money. They need money. The pandemic was not kind to them. they have increased their tax rates, which were implemented on September 30th of last year. And so now we have this 10.75 rate. So you may be shocked or surprised to see that your DC taxes have gone up on the 2021 DC tax return. And that is it, guys. That's the 2022 tax update. Hopefully I covered all my bases there. We only had about a couple questions here, so I'm going to answer these, and if there's no more, we're going to close out. Let's see. I believe BBB had a rewrite of crypto wash sale trading regulations, which previously allowed you to tax harvest by selling and rebuying immediately. What is the earliest 30-day window could be implemented for crypto? So yes, the BBB, the House version, had a wash sale rule that would basically not allow wash sales for crypto. That did not pass, so that's dead in the water. So you can still do wash sales for crypto immediately. There's no guidance on that. It's a big loophole that they want to correct, but has not been corrected. I usually apply my refund to my first estimated income tax payment. Just want to be sure that refund problems you were discussing don't have an impact on that. It could. Again, if you did a 2020 tax return and you're trying to, and you indicated on the return to apply your refund forward to that first quarter, and that return has not been processed and the IRS doesn't have that on file, you could get a notice saying, hey, you have an underpayment of tax and you have an issue there. Now that will eventually be corrected once the IRS gets to that backlog, but it's an area that you may want to check up on. And that goes to my comment about the form 2848. One of the beauties of the 2848 is that you can check to see what estimated tax payments are on file and what estimated tax payments are there. Glossary for acronyms. So the next question is, I hope you provide a glossary for the acronyms. I'm sorry, I talk a lot of acronyms. That comes from doing this for was this my 18th, 19th year? I forget. That's how we talk and chat here. If you guys have any questions on the acronyms that we use or the terms that we're using need more definition, please let me know. Send me an email. I'm happy to try to break that down as much as I can. But again, that's part and parcel of just doing the tax stuff. If there are not any more questions, then I'm going to assume that everyone has got all the good information and everyone understands everything. Let me see, I think we have one more that came through. Looks like it's a question about gifts to non-citizen spouses, which I will follow up with that person directly. But again, if there's any more questions, then I will let you all go. I hope you guys have a great day and enjoyed the presentation. And again, we'll make sure to get a copy out to everybody next week. Thank you.